Hi everyone, this is Jason Burack of Wall Street from Main Street. I just wanted to do a short video today summarizing some of the news events that have occurred in the last week or so. I think some of them are interesting and quite important to what's going on in the global markets. One of them is actually Deutsche Bank. Deutsche Bank, a lot of people in the alternative media talk about Deutsche Bank, its over-the-counter derivative problems, how they have, trillions and trillions in exposure to derivatives. I think the estimates are over 75 trillion exposure to derivatives. But it's very interesting to me to see a story from them where one of their economists is talking about, gold is still expensive, but rising economic risks and market turmoil mean investors should buy it for insurance. This is what Deutsche Bank said last week. So they're saying it's time to buy gold. I think it's very interesting, though, because obviously the other investment banks like Goldman Sachs and stuff are in public for free to the Muppets. They're saying, in public, don't buy gold, it's going down, it's going to crash. While privately, with their own account and the people who work there, they're probably buying gold like crazy on dips. So it's interesting to hear, an investment bank like Deutsche Bank, which could be the first major investment bank in this next round of collapses by the banks to fall, if they're allowed to fall, if they're not bailed out or nationalized or whatever new scheme comes in place from the powers that be, from the Bank of International Settlements. So it's just interesting to see a story like that. And then, with gold, the other thing I wanted to point out is how well the gold stocks are doing. We wrote about this in our 2015 review, 2016 preview. It's 25 pages, including stock picks with good gold stocks in there. You can go to the Wall Street for Main Street website and get the report for free still. WLSTFORMAINST.com. We've gotten hundreds of downloads for the report. A lot of people have liked the report so far. But I'm looking at a chart now, the Sprott Gold Miners ETF. And that the year to date, January 2016, this is a nice chart here. Follow the chart up, it's pretty nice. And, it's over 32% returns for the year. And obviously, if you have some gold stocks in your portfolio, if you started buying them either in November or December of last year or in January, you've been doing pretty well so far this year. The gold stocks are the one major sector on the long side in any stock market right now that's actually doing well. So obviously, there's going to be volatility and ups and downs. There's going to be profit taking. There's going to be profit taking for gold stocks, people who bought around 1075, around when gold was in the process of bottoming, who bought silver when it was around 13 and change, and have ridden it back up. They're going to be taking some profits here maybe. But, I think long term, I think we've seen pretty much the bottom for the most part. Obviously, there's going to be attempts by the cartel to do raids, knock things back down, a managed retreat, things like that. But, I think we've probably seen in U.S. dollar terms probably probably the bottom in gold and silver prices. And that was just at levels where if the price had gone much lower, the miners who hadn't been able to cut production because they were in debt to the banks, a lot of them were in way too much debt to the banks, they were in jeopardy of going bankrupt. So there was going to be legitimate supply problems. Now, obviously, the miners in developing countries who had weaker currencies to produce in, the gold and silver prices have been out of a bear market for a couple of years now. So those have been doing well. And that's why we see that the silver prices, the global silver production hasn't declined rapidly quite yet. We've seen, according to Lewis at Small Gold, my friend Louis Camarsano over at Small Gold, the Mexican silver production has still been pretty strong. Global gold production has actually still been pretty strong. We haven't seen massive cutoffs yet, but, with those copper prices down, we could see a lot of silver as byproduct if the copper price continues to be under pressure, come offline in the next year or two, depending upon the silver price. So, let's look at the 1 year chart for the Sprott Gold Miners ETF. It's a pretty spike low right there, and it's been going up, stair-stepping pretty nice. Probably time for a little bit of a correction. We see rising volume here on the move up. So we are starting to see money rotate from other stock sectors and other assets into gold and gold stocks. So I think that's a good sign that, we may have a bottom. Obviously, you only find out if there's a real bottom in hindsight, but I think that's good. The other major thing I wanted to do on the video was talk about this Warren Buffett thing. And, Warren Buffett wrote in his annual letter to shareholders from Berkshire Hathaway, which all companies are required to release an annual report towards the beginning of the year from the previous year. Warren tends to do a longer letter to shareholders. The title of this article here is "Quit Your Crying, the U.S. is Fine." I disagree with Warren Buffett on this. Maybe your corporations are doing well, but not everyone can get a corporate job. Look at the real economy here. The labor participation rate is low. There's clear evidence of so many credit bubbles and debt bubbles in the real U.S. economy, in asset markets. There's 3 levels of subprime auto loan debt. There's student loan debt. There's attempt of reflation of the housing bubble. And, basically the middle class in the United States, they've been grinded through inflation and layering on of new taxes. And for decades now, really since the 70s, I think the data pretty much proves this. And, the wealth disparity gap, the rich can afford to dodge these taxes and set up corporations and move money offshore easier and things like that. And, the rich aren't, that's why one of the reasons, besides the asset price inflation, the bubbles these central banks have created in asset markets, that's one of the main reasons with the wealth gap. So obviously, if there were lower taxes, if prices were falling, that would benefit the purchasing power of the middle class. We hear these Keynesians talk about how there's going to be all this deflation coming up and things like that. Yes, asset prices are going to fall. No, that's not the Austrian School of Economics definition of deflation. But the middle class is not really going to see, other than cheap gasoline and cheap asset prices if people have cash, the middle class isn't really going to see any beneficial deflation. They're not going to see a lot of purchasing power increases in their savings, in their dollars or other currencies that they have. It's just not going to happen. The people in power are not going to allow it. They're going to come up with new layers of taxes, whether it's Obamacare tax, new taxes for your car tax, new property taxes. Obviously, Ted Cruz, if he gets elected, which he's not leading right now, he's talking about adding a value-added tax, which would be a national online sales tax. And if the Democrats win back control of Congress, they're looking at adding, besides VAT taxes and things like that. Bernie Sanders, if he gets elected, for the people in the middle class, he would increase taxes probably over 30% on them. So, there's so many things here. Warren Buffett saying how good the American economy is. Don't bet against the American economy. Well, you know what? When the American economy was recharging, even after World War II, taxes fell a lot. After World War II, taxes started to come down. There was less rules and regulations and things like that. We're in a case here now where the people in power, they're going to come up with more rules and regulations and taxes. And obviously, if you have an online business, it's a little bit easier. But we're seeing a lot of regulations coming out where politicians in Europe and things like that and bankers there are trying to go after Bitcoin and cryptocurrency and other innovations. And so, this is a cat and mouse game, guys. And this goes back to rule number 1. That I wrote about, the 3 new rules for investing in the new normal. The politicians, the people in power, the bankers, the corporations, the special interest groups, the people with money, they're either lawyers themselves, they either have a law degree in addition to their business prowess, or they can hire the best lawyers money can buy to change the rules, to screw you and me over, the little guy, the small businessman, the middle class person. So, either we can't beat them, we can't compete, or, that they can dodge the rules. So with Warren Buffett saying how good the U.S. economy is, I completely disagree. Maybe for U.S. corporations where they can, move money offshore, or they can reincorporate in Switzerland or in Ireland or things like that. They can dodge taxes that way. I think dodging taxes is a good thing, for the record, guys. But there should be incentives here where those corporations can bring cash back to the United States with little or no taxes and reinvest it back into the United States, into new products and services, new factories, new value creation, investing in research and development. And to a large extent, there's the tax incentive plan is just not there. There's actually a really good book I just finished reading by Grover Norquist. Maybe I'll try to have him on in the near future. He came out with it last year around tax time. It's called End the IRS Before It Ends Us. And he talks in there about how, we can go to a flat tax or fair tax, drastically lower income taxes, and re-incentivize people to work hard, small business to produce and hire more workers and things like that, and start growing the economy again. So, Zero Hedge, sorry, I put on the wrong article on Zero Hedge. Zero Hedge has a good counter to Warren Buffett. Dear Warren, nothing lasts forever. Talking about, the labor participation rate and things in the United States economy that are going wrong that Warren Buffett is ignoring. Warren Buffett's talking about how Social Security promises will be honored. Yeah, right. Yeah, maybe in nominal terms when the purchasing power of the dollar drops. And America's kids will live far better than their parents did. If you have kids out there, for our listeners, how many of your kids do you think are going to live better than your parents did? Is there job security? Is there a lot of high-paying full-time jobs out there? Is there good retirement benefits and things like that at those jobs? There's very little job security nowadays, whereas, in the past there used to be a lot of that. So, I disagree with Warren Buffett. Things are changing so rapidly with global competition, outshoring, offsourcing, and things like that. And, the ability to hire people online in so many different countries that when a kid graduates college, his future is difficult. Even if he has a good skill and can get a full-time job, there's no guarantee the company won't fire him anyway to move to, cut costs and hire someone in another country. And, I'm not saying that's bad or whatever, because the company has to survive. People think, oh, it's this evil, greedy corporation, they're just trying to save a buck. Well, maybe the corporation doesn't have the margins to stay in business if government's going to keep forcing higher wages and higher taxes and things like that on them. And, we're going to see a lot more firms shut down. I mean, even Obama here at the bottom in the oil market's just getting absolutely destroyed, right? And we have a situation where Obama's trying to, kick the oil market when it's down and layer on another, I think, $10 a gallon oil tax. That's a kick in the balls, guys, when the oil companies are already down. I mean, they're getting kicked when they're down. It's really messed up. So my final article, just want to mention a little bit, the global run on physical cash has begun, why it pays to panic first. So we've seen the zero hedge articles come out about, people in Japan buying safes and hoarding cash. I think one thing about the negative interest rate policy that I haven't heard really anyone talk about yet is that negative interest rate policy, or NIRP, it's just another wealth redistribution scheme. So this is just taking Keynesian economics to its perverted, neo-Keynesian, theory of the economics professor who's a hardcore Keynesian saying, we're going to force them to spend. We're going to force these evil, greedy savers and hoarders that are hurting the economy. We're going to force them to spend so we can get, wages higher, prices higher, velocity of money higher, etc. Because, it's the paradox of thrift. It's all the people, the savers' fault for why the economy is so stagnant. This negative interest rate policy, it's going to have unintended consequences, besides being another attempt at a wealth redistribution scheme. And obviously some of these investment banks think that this could be, if the Federal Reserve actually implements it in the United States, it could be 4% per year. There's some investment bank research reports talking about this in a couple years, that's what NIRP could be. That would be insane if it's 4% NIRP per year. But, the global run on physical cash, the unintended consequence, and I don't think these Keynesians, neo-Keynesians like Krugman, all these other guys understand this, is that people are going to take their cash out of the system. So there's going to be forms of bank runs then. People are going to start taking their cash out of the system already to these fractional reserve banks that don't have any cash to meet the obligations in the system. So this could cause bank runs then. Or versions of bank runs, or they'll have to go back to the central banks and ask for more money. So this is just ridiculous, guys. This is all one big clusterfuck. There is so many problems wrong in the global economy right now. Obviously, if you're trying to manage money for your investments, I think you should definitely have cash for opportunity. I think the gold stocks may have a little corrections along the way, but I think there's definitely good buys. The royalty and streaming companies are the safest ones, but a lot of the gold stocks are doing very well. If you don't know what you're doing in gold stocks, there's good gold stock ETFs, like this Burack Gold Miners ETF, which is SGDM, and there's others too, like the GDX or GDXJ or SILJ. Those ones, each one has positives and negatives. But if you're interested in consulting, we can talk about this more, teach you about gold stocks and how to invest in them. And, oil is going to have a bottom here in the near future too, because at some point, the oil producers, we're starting to see the bankruptcies start to roll. Chesapeake Energy looks like they're about to fall. Lynn Energy looks like they're about to fall. Petrobras is probably going to be close to going bankrupt in the near future. So and then that could take down the banks with the energy loans. And no one's really even talking about in the mainstream yet any of the emerging market countries that could be bankrupt in the near future then, that have too much exposure to base metal prices and also to oil and energy loans. They took out all this money to invest in infrastructure, and now those loans, they can't pay those either. So, there's a whole bunch of dominoes. We're out of the eye of the hurricane now, and the dominoes now are lined up. So I don't know what the powers that be are going to do. They're going to change the rules, guys, and you're just going to have to pay attention. I'm sorry, it's going to be volatile. It's going to be difficult. And, it's back to the word clusterfuck again. It's just hilarious to say it. Off the record with a lot of my guests, whether it's Gordon T. Long and some of the other guests that I've interviewed in the last couple weeks, I discussed all this with them, and, everyone's pretty much agreement that it's all just one big clusterfuck. So anyways, guys, thank you for liking this video.